and we started building alliances within City Council to create an inside-outside game. So as we would pack City Council meetings with public comment, and we had a legislation team that would spend our weekends reading banking contracts. None of us, we're all volunteers without any financial background, but we knew that telling City Council to divest wasn't going to take billions or millions of dollars out of Wells Fargo. We had to understand what the banking terms were to be able to talk to the Office of Finance, to be able to guide these legislative directors in City Council as to what they need to do to take money out. So through our months of effort, we spent weekends reading banking contracts, writing amendments to banking contracts, lobbying those exact points in citizens' lobbying meetings. And in 4 months, we got LA City Council to divest $40 million in holdings out of Wells Fargo. We went back in, and 9 months later, we got LA City Council to effectively disqualify Wells Fargo because of their substandard Community Reinvestment Act rating, because of their horrible track record with communities. This is a bank with a laundry list of crimes against humanity, of defrauding consumers, of mortgage fraud. So we knew by virtue of our tax dollars sitting in Wells Fargo, we were essentially complicit to these crimes. So that is what we continually advocated within City Council, that the City of Los Angeles had a moral imperative to bank with a better bank, to bank with a socially and environmentally responsible bank. So 9 months into the campaign, with endless what we called co-occupation, sitting there in City Council meetings with Divest LA signs and phone banking and citizens lobbying and actions, 9 months into the campaign, LA City Council unanimously voted to disqualify Wells Fargo from the commercial banking services. And in addition to that, they broke up 800 Wells Fargo accounts and then added a 30-point social responsible guideline for all of their RFP contracts. So any bank that banked with the city had to follow a 30-point guideline to be able to qualify for the city's banking services. So with $100 million cycling through Wells Fargo on a daily basis, that essentially was the largest bank heist in history. While we were advocating for divestment, we knew that LA City Council didn't have any real options. Moving their money out of Wells Fargo, the only other options would be the 5 big banks that would be able to handle the funds of a city the size of Los Angeles. So you're talking Bank of America, Chase, U.S. Bank. These were our big banks that. So this was the first time in U.S. history that voters had the opportunity to voice their support for a public bank. And so this is actually truly revolutionary and historic because it came from a group of scrappy volunteers. So with Measure B, in July 2017, we kicked off the Public Bank LA movement. That same month, LA City Council unanimously voted to put public banking on the ballot to explore the creation of public bank. A year later, just this past July, we got called into Council President Herb Wesson's office, and he informed us that it was coming on the ballot. And we were excited, but we were also like, oh shit, because we had 4 months to build a citywide ballot measure campaign with no funding and no infrastructure. So I don't know how many of you guys have heard of Measure B, but this campaign, you have heard of Measure B.
Yes.
So this campaign is incredible because it was a small group of volunteers that ended up garnering 44% of the vote and 430,000 Angelinos voicing their support. So 4 months ago, when we started the campaign, no one knew about public banking, and now it's a topic of conversation. We met with Alexandra Ocasio-Cortez when she came to Los Angeles in August, and really like put the issue on her radar. And now it's gone onto the national stage. So it's really incredible to see where public banking is. I'm going to hand it over to Chris. He's going to talk about public bank, what public banking is, and what the benefits are for cities of Los Angeles, and how we can be able to apply it here in Orange County. Because we after you talk about that, then I'll talk about the California Public Banking Alliance and what's building here, and we need Orange County to join the fray.
Sure. So thanks for being here and letting us talk to you guys about public banking and what we were doing here up in LA. A public bank is basically, it's the same kind of thing as a private bank, but the shareholders, instead of being a bunch of old guys in the top of skyscrapers smoking cigars, it is the public. So all of the investments that are made for the bank, everything that they do is, rather than driving an increase in shareholder value for the 1%, it is intended to drive shareholder value for the local community. So it is a bank that is infused with a public, a sense of public good. That is part of the core foundation of any public bank, is that it has to operate for the public good, which is, if you look at like the Sparkassen system in Germany, a great example there, they offer low-cost mortgages to first-time homeowners that are well below market rates, because it's not something that they're trying to make money off of. In fact, they oftentimes are losing a bit of money in that process. But they do it as a community, as a public good. It's providing a service to the community that allows for the community as a whole to become richer. One of the great things that Bank of North Dakota that Trinity mentioned before, one of the things that they do is they work very closely partnering with community banks and credit unions, and by using their investment capital, because they actually conduct all of the state of North Dakota's business, every financial transaction that the state engages in has to go through the Bank of North Dakota. So they have a pretty substantial chunk of change that they're working with on an annual basis, and they're able to then loan that out to community banks and to credit unions to increase their cash reserves and to help back loans that they make to low-income communities and to projects that the local populace wants to see. So you can actually vote. There's a democratic process to vote to get bank support for a local project if that is something that the community wants to do. So these are the kinds of things that public banks can do. And another.
And let me add.
Sure.
Like lack of access to credit is a crime against humanity.
Yeah.
Because when you don't have access to credit, as a poor person, you can't buy a home. You'll never be able to buy a home because you don't have good credit, or a car, or finance your education or your children's education. So having a lack of credit is something that needs to be addressed. And in Los Angeles, we have 600,000 residents in LA County who live in what's called banking deserts, where they don't have access to traditional checking or savings accounts. So then they have to they have to depend on payday loans and payday lenders, which are predatory. And so you have real people who are directly affected by banking and finance. And so it's so critical that we tie, what's happening in Wall Street to the economic inequality that exists here in society today, and that we have to realize, to be able to create the society we want, we have to take the financial power back from Wall Street and put it back into Main Street. And that's such a critical, that's at the core heart of this movement is driving, equality and social justice. And that's why it's so important to look at public banking. It's more important than just, refinancing existing debt. Yes, it saves the city money. Of course, keeping our money in our cities out of Wall Street, we can cut our infrastructure costs in half. So that doubles our investment power. But we also have to look at public banking as a tool, as a very powerful weapon to be able to finance all of the things we need in our society.
So to expand on that a little bit, what Trini was talking about in terms of cutting infrastructure spending, it actually, I like to think of it as it doubles your capacity for infrastructure spending without actually increasing taxes. Because if you think about it, when a city or a county or whatever wants to go out and build something, say it's a bridge, the way that you do that is you go out and you issue bonds and it's basically you're taking a loan that you're then going to spend on the project. Then you're going to pay that back over a period of time, typically 30, 35 years, during which time you're effectively going to be paying twice the amount of the initial capital that you pulled out, just like if you're getting a mortgage for your home. So because you end up spending all of that money amortized out over the life of the payment period, you end up spending, if you're going to build $1 trillion bridge, you spend $2 trillion if you're building $1 billion bridge, very expensive bridge. You build a $1 billion bridge, and you then are paying that back over 30, 35 years, you end up spending $2 billion, which means that's another $1 billion that is going purely as profit to the banks that finance this, or to the bondholders who are investing in these kinds of investments. but you can have those bondholders be investing in the public and then keep all of the money that is returned, comes right back into the coffers of the city, where the interest is being paid to the city's bank, and then that interest gets turned around and returned to the city to be spent on more things. Going back to Bank of North Dakota, since the year 2000, it's about $500 million that they've returned to the state's general fund over the course of that time, based on the profit that they've been making by subsidizing and financing local community projects, small businesses, and the other types of projects that the community wants to see. And they also have a great track record of having, I think it's the lowest rate of student loan defaults in the country, because their loans are backed by the Bank of North Dakota in their state, which then helps to make sure that the rates are low and that they're not out there for just a pure profit motive. Going into part of what makes public banking so appealing to not just the city of Los Angeles, where we were able to get the full board, including the one Republican in City Hall, to get on board with it, is that, like I said, you can spend more without collecting more revenue, which means that from a fiscally conservative perspective, you could potentially start to lower taxes and still keep at least the same amount of spending, if not increase that spending, which makes all of the Republicans and conservatives happy. I mean, it's also a great way to actually start spending the amount of money that we need on the socially responsible infrastructure that we are sorely lacking, especially ever since we ripped up all those lovely streetcars we used to have in LA. But it's part of this whole process. It's the public banking concept. Once you start to explain it to everybody, really is genuinely appealing to anyone who is not a banker and sees it as potentially a threat. But even if you're involved in a community bank or a credit union, you can still see the advantages that are present whenever there is a strong option outside of the large banks like those on Wall Street to go back and collect more capital from and increase that supply and availability to everyone, especially to working class folks that are living in banking deserts. Because you can't have the community banks expand into those regions or the credit unions expand into those regions if they don't have easy access to capital.
So, the next financial crash is impending. Experts say that it's going to happen within the next year or two. The last financial crisis in 2008, we bailed out the big banks with $700 billion. The crash of financial aid resulted in the loss of 7 million jobs, over 4 million foreclosures. So are we going to let that happen again, or are we going to fight back? Are we going to create a real solution? So in May, we were part of the founding team of the California Public Banking Alliance. So as we were building out the Los Angeles public banking movement, other cities in California were doing the same. So we went to San Francisco and formed an alliance called the California Public Banking Alliance that includes Los Angeles, San Francisco, Oakland, Santa Rosa, Santa Barbara, Santa Cruz, San Diego just joined on board. Orange County is up next. So what we realized is that if we have all of these cities fighting for public banks, why don't we create one bill at the state level that would create a uniform regulatory framework for a network of public banks? So instead of all of these cities fighting for their own legislation of what a public bank would look like, we create one so that we create a bill so that charter cities and regional centers like Oakland banded with the city of Alameda and Berkeley to create a regional bank. Los Angeles and San Francisco are obviously larger cities, so they could have their own banks, but smaller cities would have regional banks. So this bill would allow these regional centers and charter cities to create a bank, to be able to form their own bank, and this bill lists how the bank would be insured and collateralized, baseline social responsibility standards. So that's what we're fighting for right now. We're working on getting co-authors. We're actively meeting right now with legislators. We have Senator Rob Bonta signed on board as a co-author, Ash Kaura, Senator Scott Wiener, and the Assembly Member, I'm blanking on the name right now, but we have 4 co-authors signed on board, and we're looking to introduce the bill within the next year. And so it's so critical right now to have the alliance. This is going to be this isn't Los Angeles versus Wall Street. This is now California, the 5th largest economy in the world, versus Wall Street. And with all of the energy of building across the country, because it's not just California. Seattle has a public banking movement. Santa Fe, Washington, D.C., Public Bank New York City just kicked off a few months ago and did a big rally in front of their city council. Now they're pushing Mayor Bill de Blasio to create a public bank. Of course, Alexandria Ocasio-Cortez, whose home state is in New York, is pushing public banking now on the federal level. So there is all of this energy right now, and this is a historic moment. You know, we're never going to have this opportunity again. You know, the Occupy Wall Street movement did an incredible job of waking people up to the 99 versus 1 disparity. And yes, the big banks are, you know, it wasn't just about fuck the big banks. It's now this is like, here's a solution. This is a real viable solution. And we have an example that works here in the United States, all across the world. 30% of banks around the world are public banks. And Chris mentioned the German Sparkassen earlier, and Germany has a network of 400 municipal banks that's able to finance over 70% of their green energy infrastructure. And that's kind of what the Sunrise movement is pushing with the Green New Deal. The idea of you know, how do we fund a green energy revolution? Well, we need money. So we need to be able to control that capital. So it's so the California Public Banking Alliance, it's building right now. It would be incredible to get Orange County to join the fray. You know, we've got legislators that need to be pushed who are from all throughout California. So we've been dividing the regional outreach between the team. It's a small team, but it's growing. And you know, as I mentioned, there's 8 cities right now and growing. Do you have a question?
Yes, question. Two-part question. First part, what differs, how does this differ, a public bank from a credit union that stands a geography like Orange County's credit union that's available to anybody who lives in Orange County? So what's the difference? How is it different from the government choosing to put its money in a credit union? That's the first part. And the second part is, who controls the credit union? Who makes the public bank? Who makes the decisions? Who chooses that?
So a good example is, again, to look back at the Bank of North Dakota. And as a random aside, really quick, the bank, there's a new public bank that was just formed a couple of years ago in Samoa, because the Bank of Hawaii, which is a commercial bank, left, leaving them in a complete banking desert on their little island. So they went and formed a public bank, and now they're getting involved in the big financial system in this country. To answer your question, a credit union is providing the kind of commercial banking services that we as individuals would use on a day-to-day basis, like savings account, checking account, things like that. What we're talking about with this kind of a public bank option is a banker's bank. So rather than it providing a place where you would go to deposit your check into your account in your name, it provides banking services for large projects that are run by the city. So they do the financing of loans rather than the management of day-to-day checking and savings accounts.
So a credit union is too small to handle the size of the business. The typical credit union has assets like max at $1 million.
At how much?
And so $1 million.
Okay.
So when you're talking about
Well,
you're talking about
ones,
building, some are a few bigger, but if you're talking about refinancing infrastructure, building infrastructure, you're talking multi-million dollars. And so a credit, you can see the public bank as like a credit union, but for the city departments. So right now in the city of Los Angeles, we keep billions of our dollars in checking and short-term saving accounts in Wall Street banks. So this would be a bank for us to keep our money.
But when it comes to who makes the decisions for how that bank is run, that's all basically up to the individual communities that establish these banks. North Dakota has a system where they have their governor, along with, I believe it's their Secretary of State and a couple of other appointed officials who act as the board. But because of the transparency that's built into their system, it's been pretty dramatically free of corruption, which is always great to see. So you can have a system that comes in and is governed through appointed officials, and hopefully we'll have to have some number of banking professionals involved in the process. An example that we've been advocating for is to emulate the Sparkassen system, again going back to Germany, because they have a tripartite board system that is a bunch of appointed officials then also workers from within the bank who are elected by their fellow workers to then act as the voice of the people within the bank, helping to make sure that there's nothing shady going on within it. And then there are also local community members as well who are on the board. So you can create a governing structure that is very transparent and open and clear about how it is governed. That's part of what Charlie was talking about in terms of having that social contract as part of the bank's initial founding, is that by mandating that they have the transparency and the obligation to the local community to fund the types of projects that we're looking for, especially things that are key to everyone here in California with affordable housing and public housing projects, community co-ops, or tenant co-ops, so that people can actually begin to own the buildings in which they live and be free from predatory landlords who are willing to just jack up the rent anytime they want. These are all the different kinds of things that you can do with a bank, and you can govern it by looking at examples of what's been done in the past and using those as a template to build upon.
Thank you.
No problem.
Yes. Is there legislation at the federal level we should be advocating for to level the playing field? Won't big banks try to squash public banks and unlevel the playing field?
They are definitely going to try. So with Measure B, the California Bankers Association came out against us, the Western Bankers Association, the American Bankers Association. We've made enough noise to get this on the radar of Wall Street. So they didn't really fight. They had a few people lobbying against us for the ballot measure, but the LA Times, which is now owned by a billionaire, came out and did a very damning indictment against Measure B and called it a half-baked idea right before absentee ballots came out. And we didn't have the money to be able to communicate to the millions of voters that we would need to be able to combat that messaging from the LA Times, which is like the city's paper on record. But even with the LA Times coming out and calling it a half-baked idea, completely outright dismissing public banking, which is absurd because Measure B would have just amended one section of the city charter to allow the city to explore the creation of a public bank. It didn't create a bank. It was such a simple vote that they intentionally misled the public and did a lot of fear-mongering, for their own reasons.
So we had our members of our legislative director, as well as Ellen Brown and our president of City Council, all sat down with the LA Times editorial board and answered all the questions that they had,
which they ignored.
And they completely ignored all of those answers when they wrote their piece. So,
but so they will be fighting. What we've been told, because they learned that Gavin Newsom also supports public banking at the state level, they're putting together a contingency plan right now to be able to fight us at the state level. But there's no existing legislation right now. There's actually a few that's been introduced. One is an extension of SB 930 was the cannabis banking bill. That got killed on the floor, and now it just got reintroduced. So that's another part of the public banking conversation is cannabis. A lot of legislators are interested in how cannabis factors into this because of the money. So in LA, it's billions of dollars statewide. It's $7 to $12 billion that they can get in revenue. And so
we can have just time for two more questions.
Okay.
Well,
so
my question was federal legislation. Should we be advocating with our newly elected blue Congress for something? Obviously, have a much better chance in California of getting things done.
Yeah, it's going to be a hard fight federally.
Well, at the federal level, there's not really a need for the creation of a federal public bank because of the way that the modern how monetary
doesn't the Fed regulate banks? Doesn't
there is regulation through that process, but there's no explicit ban on a public bank, because if there wasn't,
okay, so the state is the way.
The state is
yeah.
the fight.
Last
Yes.
question here.
Yeah. I also remember because you mentioned how the LA Times kind of put out a damning piece about public banking. I also remember with lobbying in support of Prop 10, how with it newspapers and even elected officials were spreading malicious lies about it. So how do we combat all these lies and half-baked measures or whatever things they say about public banking. What do we do? What do we do to combat that?
Education and outreach, and that's exactly what we're working right now. If we had a little bit more time and a little bit more money, it would have passed. Citywide ballot measures in Los Angeles, typically you need a war chest of about $750,000 to $1 million. We raised maybe $50,000 and got 44%. It needed just a simple 51 majority to win. So education, when you start talking about public banking, it intersects in so many areas, from social justice to environmental justice to housing rights, that it's intuitive to people. So it's about really getting the message out there. Coalition building, that's what we're also working right now. It's pulling in more groups. The public banking rate is endorsed by the LA County Democrats. Also, the California Democratic Party also passed a resolution in support of public banking.
But you also know, like, for instance, the California Democratic Party also supported things such as Prop 10, and then worked behind the scenes to cut it off at the knees. So I think, and maybe you can agree or disagree. I think you're right. The best way is through education and outreach, because at the end of the day, Wall Street is going to be spreading all these lies about public banking, and you need a way to combat that.
That's why it's so important that's why we built the alliance, to have a fortified front against Wall Street. So if these legislators start backtracking, we can have people up and down the state of California, through all these cities, call in the legislators, do office visits, lobby visits, go to the state capitol. We're already, starting to talk about doing getting the alliance together to lobby in Sacramento for this. So it's going to take a massive resistance, a massive populist resistance to take down Wall Street, and it has to start in California. And this is what's building right now. So it's such a critical moment.
I know some names we should talk at the end of the meeting.
Let's do one more. Jeff has been wanting to ask a question.
Yeah, I guess it's more of a twofold, or maybe a threefold thing. You keep using the word public banking. You made a statement of it wouldn't really be like your own commercial bank we all are used to, or federal credit union or whatever. Okay, it'd be more for the counties and the state.
It starts
so
that way.
why? So to me, it's more of a government-run bank. It's not really public. It's because you made the statement. It's for the cities and stuff for their handling of money. Correct. Okay, so we wouldn't have we have no real say in it other than who we vote in. Okay, into the government. That's the only say we really have. And I don't quite see where that would lower or make financing affordable housing better, means we wouldn't be going to that bank. Only the city or county or state building would go into that and get the lower rate.
So
how would we, as individuals, get a lower rate to be able to afford housing?
So the reason why it has to start small, and it's for the city, is because you lower the capitalization rates. If you have a bank that doesn't have ATMs and tellers, then you can create a bank with less money, with $10 million maybe. So that's the reason on a strategic level why it has to start as small as a bank for the city. So the bank for what we were fighting for in Los Angeles would work like the Bank of North Dakota, would work in partnership. So the bill that we're passing at the state bars the public bank from competing against community banks and credit unions. So it has to have a social mandate as part of the development of the public bank. That's what we're pushing for, that this isn't just about saving money. This is using our public credit for public good, that it has to have socially responsible mandates in it. So its economic development goals has to address the needs of the city. So that's why it's going to be very important for each localities, each regions and municipalities to fight for the strongest, most socially and environmentally responsible charter as possible. What this bill does is opening the door for public banking, and it's going to be up to us to be able to fight so that these cities are going to hold the money accountable to its citizens.
So one of the ways,
But my bank has no ATMs. okay? But I can go to any ATM I
Yeah,
want.
but your bank is your bank is a for-profit institution that is a totalitarian, has
The
not
for,
subject to the
and
Fourth
they will
Amendment.
be for profit
No, so-
because they
but-
have to be, because they have to generate capital.
But the profit.
It may be less,
Hold
it
on,
may be
the
less.
public banking thing, the nice thing about it is that, yes, it has a profit motive. However, all of that profit is then returned back to the community in which it was generated. So